Markets are navigating a dual-threat Tuesday as long-standing technical supports start to give way. We're seeing a structural crack in sentiment, driven by institutionalized energy tolls in the Middle East and the first major signs of stress in private credit liquidity. Starting with the macro baseline, the final data for the fourth quarter shows non-farm productivity turning negative, while unit labor costs continue to climb. This macro squeeze on margins arrives alongside new signs of stress in the private credit market. 42 Macro reports that Apollo and Ares have now imposed 5% withdrawal caps on their retail funds, following a sudden spike in redemption requests. Geopolitical tension is also coming to a head. Nana reports that U.S. and Israeli forces have struck Iranian gas facilities, following the start of a formal tolling regime in the Strait of Hormuz. This escalation puts both energy infrastructure and physical supply chains under immediate concurrent pressure. Turning to the $1.7 trillion private credit market, which is currently facing a major liquidity test. According to 42 Macro, redemption requests at Apollo and Ares recently spiked to 11%. In response, both firms triggered gates that limit withdrawals to 5%. It is a move that underscores the structural mismatch between the daily liquidity investors expect and the illiquid nature of the underlying assets. The stress isn't just internal, it's meeting a weakened macro foundation. 42 Macro notes that federal government shutdowns have historically stripped more than 100 basis points from GDP growth. This creates a fragile base for the current cycle, as institutional lenders hit withdrawal hurdles just as the broader economic cushion begins to thin. A fundamental regime shift is currently rattling technology valuations. Nana reports that Anthropic's latest Claude update allows the AI to operate computers directly. This capability challenges the core utility of traditional software as a service, forcing a market reality check on whether legacy workflows requiring human operators are becoming obsolete. This tension is now reaching the industry's core alliances. Nana highlights that OpenAI's recent fundraising documents reportedly list its heavy dependence on Microsoft as a primary strategic risk. Meanwhile, Bella notes that as Amazon and Anthropic deploy autonomous agents, the market is reassessing whether traditional software interfaces are becoming obsolete. Energy and trade security are entering a more expensive era. 42 Macro reports that Iran has institutionalized a tolling regime in the Strait of Hormuz, with some levies reaching $2 million per vessel. This structural risk is mirrored in the supply chain. The Hoover Institution notes that China's dominance in rare earth processing remains a primary choke point that has already impacted U.S. auto production. The impact is already showing up in U.S. auto production. Beyond those physical constraints, 42 Macro identifies a front-running anomaly, spotting a surge in oil volume 15 minutes before a recent presidential post. In the sector sweep, we're seeing a clear divergence between regulatory pressure and income yield. Bella reports that a draft of the Clarity Act aims to ban stablecoins from paying interest, which triggered a 20% slide in Circle. Meanwhile, income investors found a bright spot in SCHD. The fund just announced a 3.3% dividend increase, helping it maintain its outperformance so far this year. Moving into big tech, Microsoft is testing a technical support floor at $360, where it carries a price-to-earnings multiple of 23. At the same time, Alibaba reported a 46% jump in cloud revenue as the company continues its strategic pivot toward AI infrastructure. The S&P 500 has broken below its 200-day moving average, a technical shift that Nano reports has pushed trend-following funds into active shorting. In this volatile stretch, Aswath Damodaran suggests that market timing rarely adds value compared to a disciplined passive strategy. For your watch list, keep an eye on the 6,427 support level and monitor CTA positioning alongside any further credit stress in the software lending space. As we navigate these structural floors, the market continues to test long-term levels, while liquidity and AI disruptions evolve. You can find a full list of sources and attributed claims in the description below. Stay disciplined, subscribe for more high-signal recaps, and we'll see you tomorrow.